Let's take a look at an amazing trade of the day for June 21st, 2022. A trade that followed our risk management settings that were established before the trade. We're executing a long Eurodollar trade right now. Stop below this key AT line. Here's a trade long at 105.49.3. Stop at 105.42.1. Take profit 105.50.79, which is 1.25% of the number of pips that you have in your stop. So our target was hit, profit was taken, and of interest here is that we came up after we bought down here within a 1/10 of a pip. That's a 1/10 of our target. So the profit was not taken here. We came back down, held our stop line, shows the importance of where you place your stop. And then we came back here and our profit was taken. One of the rationales here behind the trade, I'll show you in the drill down in a second, but once you correct it off this high, we treat it as a correction. We want to take our profit within this range here. So we didn't have to take out any lines to make our 1.25 to 1 risk reward. Now, one of the rationales when trading for the long side, and where my view changed, is starting with the daily chart, we had this double bottom, and that really stood out in a glaring way. Then we went down to the 4-hour chart. We had a directional indicator. And even if you went down to a 1-hour chart, you really had a directional indicator over here as well. So from that perspective alone, mainly the 4-hour and the 1-hour told me the minimum I could trade both sides. But if you look here, we have red lines dominating even the 4th line. It told me I could probably trade from the longer side with a little more assurance. And that's why I was looking to buy a dip after we made the early high here, and especially where the low of the day was far out of range, and therefore you were not running into any key stops on the downside. So sum up, trade was taken, profit was booked, and stop held.